I warned you. I told you this would happen. Not only did I tell you this would happen, I told you what the numbers would more than likely be. Welcome back, everybody. If you're new, my name's Nicholas, and this is Investing Against the Grain. In today's episode, we are unpacking these record-breaking numbers from Tesla with their deliveries that came out yesterday. Now, I'm sure by this point you've seen a million different videos of people breaking these things down, but hopefully I can add a little twist to this. And before we just jump into this, let's have a word from Elon about what this quarter meant and, in other words, how he feels about it.
I mean, for me, it's simply this is something that is important to get done, and we should just keep doing it or die trying. And I don't need a source of strength.
So quitting is not even like
it's not in my nature.
Okay.
And I don't care about optimism or pessimism. Fuck that, we're gonna get it done.
So to sum that up, fuck that, we're gonna get it done. And guess what? Elon, Tesla, all the team, Giga China, Giga Fremont factory, even the people in Austin, Berlin, they got it done, and they're going to continue to get it done quarter over quarter. Now, let's take a look at these actual numbers. So here we can see that the total production was 305,000 vehicles. 305,000 vehicles. All right, if you just annualize that out, that's 1.2 million vehicles a year. 1.2 million. Now, if we look at deliveries, 308,000 vehicles. In other words, they pretty much sold all of the inventory they had, and they sold all of the production that they made in Q4. This is wild. These numbers are absolutely wild. And why are they really that wild? Well, the consensus on Wall Street, which we'll talk about more in a second, the consensus of Wall Street is that for 2022, that Tesla will deliver 1.3 million vehicles. As of Q4 in 2021, with just the two factories, Fremont and Shanghai, which both are still expanding, they're at a runway of 1.2 million vehicles. So once again, analysts are off the mark. But let's dive into this a little deeper. Before we do that, do me a favor, hit the like button, hit the subscribe button, ring that bell, and let's get into it. Let's take a look at my model. If we look here, you can see what my predictions were. And I did this with all of you. I did it on Friday, right? I gave my absolute low bare minimum of what Tesla would deliver. It came at 291,000. I told you my high, which I said was 315,000. And I told you what I thought would most likely happen. 303,000 vehicles delivered. What happened? Tesla delivered 308,000 vehicles. I was off by 5,000 vehicles. 5,000. Now, I don't say this to brag about myself or anything, but I point this out mainly because I think it's important for all of you. You're spending your time watching me. You're looking at my models. Well, what good am I if I don't show you when I'm accurate and I keep myself accountable, but I also call out when I screw up? Okay, last quarter, I called out that I screwed up. I was a little optimistic on the delivery numbers, but I took that, I learned from it, I iterated, and here we go, and we are essentially dead nuts accurate in my opinion. So I take this very, I take your time and I take that responsibility very importantly to me. So I take it serious. To me, this matters. All right. If I'm not providing value for you, then, I need to figure out what's wrong and I need to iterate because your time is valuable. So with that said, we can see here, Tesla just had a blowout number. And forget about what my estimates were and forget about what Tesla actually did. What's more notable is how off all these analysts were, all these experts, these people who do this for a career, these people who went to Wharton, who went to Harvard, who went to all these amazing schools for finance, yet they cannot figure Tesla out. Look at this. 265,000 to 275,000 was their estimates. They were so far off, right? Their highest was about 275. That's over 25,000 vehicles off, right? What you're going to see over the next 2 to 3 days, everybody's going to change their estimates. And this is going to have a ripple effect. It's going to have a domino effect. So first what's going to happen, everyone's going to have to rejigger what they did for 2021 Q4. So earnings come out at the end of January. Everyone's going to have to redo their numbers. They're going to have to put them to the upside. And then we're going to have all these new price targets for Tesla. And then we're going to have all these revised numbers for 2022. This whole domino effect, guess what that leads into? Pushing the stock price up higher. Like I said, for the last a month and a half, Tesla should be a $2,000 stock today. All right. Nobody else sees it apparently, other than all of these YouTube and Twitter Tesla followers, which we're just called fanboys because we have these overly optimistic numbers, yet these overly optimistic numbers keep being accurate over and over again. So at what point are we not fanboys and we just see something that everybody else isn't seeing? All right. It's not just a coincidence, right? This is a repeatable thing. It keeps happening over and over. Whether it's Troy Teslike, whether it's Rob Maurer, whether it's Steven from Solving the Money Problem, whether it's Dave Lee, like it just keeps happening over and over, right? Everybody is being more accurate than these analysts. So I think where you get your information from is important. Now, let's take a look at some other numbers here. So if we take a look at these, I call them Bloomberg numbers, Stephen Mark Ryan was actually asking for this on Twitter last night. I thought it was very interesting. If we take a look here, if you look at what they're forecasting for 2022, you can see near the top, you see the dates, 2022, 2023, and we can see what the total delivery numbers are. For 2022, they're estimating 1,296,000 vehicles delivered. Tesla essentially just did 1 million vehicles. So you're telling me that you think with Fremont still ramping, with Shanghai still ramping, that they're only going to get another 200,000? And don't forget, Berlin and Austin are coming online. Let me put this in another way for you. Berlin and Austin will probably ramp very much like what Shanghai did, and in my estimation, even better, because there's a lot of learning that happens. There's a lot of automation that's happened. Shanghai, in its first year, ramped to 150,000 vehicles for that first year. Second year was 500,000. So let's take the first year of Austin and Berlin. That's 150 each, conservatively. All right, that's 300,000. All right, you take that 300,000, you add it to the 900 that Tesla just did. That's 1.2 million. And then we think about Shanghai continuing to ramp up. I would say there's at least another 100,000 there. So do you see what's happening here? Do you see how this just keeps growing? Like, they're so off the mark here. It's unreal. And keep in mind, China is at a 70,000 vehicle run rate already. And so that equates to essentially 800,000 vehicles a year. So if China's at 800,000 vehicles, let's say we get 500 from Fremont, we get 300 from Giga Austin, Giga Berlin. I mean, these numbers are insane, right? We're just going to blow past these numbers. And so what this tells me is that we are essentially a year behind on these numbers. Okay, now I think one of the best ways to sum all this up is through this graph, this chart that James Stevenson made. So take a look at it here. And I think this is just very indicative of the growth we're going to see with Tesla moving forward. All right, this is a fundamentally misunderstood company. They are growing exponentially. Okay, this chart shows it all. It's growing year over year, quarter over quarter, up and to the right in an S-curve fashion. I told you guys, what was it, end of December, early December, end of November, I was telling you that these $900 stock prices, these are opportunities, these are discounts. Buy it up now. I told you I'm no longer buying Tesla stock. I'm buying Tesla call options because I'm so bullish. I laid out all of the catalysts for you. You know what I underestimated? This catalyst, the Q4 delivery numbers. I did not think that this would be even more of a blowout than what I even anticipated. Look, I know my numbers were accurate, but you know, part of you is always, I think when you put out these numbers out there, it's very humbling because you're putting it out there in order for everybody to scrutinize you when you're wrong. And inevitably, you're eventually going to be wrong, you know, like I was last quarter. And, you know, it's humbling. You're out there putting these numbers out, these predictions, these forecasts, your models. And if one thing's off, right, it's a cascading effect. Everything gets affected. And so to have all of this happen and now we see this reaction to stock, you know, pre-market up over 7%. I think that by the time we have earnings and maybe just after earnings, we're going to be looking at anywhere from a $1,200 to $1,400 stock price. All right, I think we're going to clear past the all-time highs of 1245. I think we are on to a bullish run. Now, I want to address one more thing. This is just kind of technical analysis. People talk about the gap, filling the gap, all that stuff. We're probably going to gap up today. We're definitely going to gap up today. Now, I don't think that's a big concern, especially for people who are long-term investors, right? That's what we're all about here, long-term investing. So if you're already in the stock, if you have shares, don't worry about it. This is just good. Just enjoy the ride. Look, we're looking for 5-10 years down the road. We're talking about when the stock price is anywhere from 5,000 to 10,000 a share. That's what we're looking at. So these little ups and downs, if we gap up, if we fill the gap, don't worry about it. Ignore it. Just enjoy today for what it is. Enjoy the ride. Today's gonna be a fun day. You know, be happy that you are investing in a company like Tesla that keeps blowing away expectations, that is so revolutionary that still, after a decade, analysts still cannot understand the company well enough to put a prediction on it, that they can still be this far off. And guess what? We are just getting started. We are just getting started. There's so much room to run. We're at a $1 trillion valuation. I'm telling you, this will be the biggest company in the world by a mile. All right. What, Apple is about to approach $3 trillion? I'm telling you, Tesla will pass Apple. Tesla will be a $5 to $10 trillion company by the end of the decade. It's going to happen. It's inevitable. It's not if, it's just a matter of when. All right. Congratulations to everybody, especially all you long-term stockholders. You know, this is why we invest for the long term. This is why we don't try to predict, you know, price and, you know, try to time the market. This is why we dollar cost average, right? That's the way to long-term wealth. That's how you get to, you know, financial independence. That's how I got to a financial independence, is by doing the slow grind, dollar cost averaging over and over and over, buying when things are low, not selling, holding, having conviction, doing the homework. And that's what you're doing too. So be proud of yourself. Be proud of Tesla. Congratulations, everybody, on an amazing quarter. And I cannot wait for these earnings, because these numbers are going to be insane. Margins are going to be insane. Revenue is going to be insane. Net income is going to be insane. Everything is going to be insane. I love you all. Thank you for watching, especially if you stuck to the end. Do me a favor, hit the like button, hit the subscribe button, ring that bell. Peace.